Hey guys, how's it going? Joseph Henson here with Henson CPA Group. This week we're going to go a little bit more in depth with cash flow and what you can do using cash flow lifelines, avoiding the crunch in your veterinary practice, why profit isn't enough to keep your clinic afloat. Again, I'm Joseph Henson CPA with Henson CPA Group, and I appreciate you guys being here tonight. Why does cash flow matter? Cash keeps payroll, inventory, and overhead running smoothly. If you can't pay your employees, they're not going to be there. If you don't have inventory on hand, you're missing out on sales. And overhead is going to be needed just to keep the lights on, keep the gas on, keep the water flowing. All those items are one of the reasons cash flow matters so much. Banks and vendors don't care about your profit and loss statement. They care about what's in your bank account. You could have a $10 million company on paper, but your bank account has $10,000 and you now need a $700,000 line of credit for some reason. Using extravagant numbers here to kind of drive home the point. And then practices fail not because they aren't profitable, but because they run out of cash. A clinic can be extremely profitable, but have no cash on hand. You can't continue to operate if you aren't able to pay your employees, have inventory on hand, keep your lights on. Just like I said above, you're not failing if you have a profit. You're failing if you don't have the cash to continue going. The profit versus cash trap. I talk about this frequently, and I will until it's driven home. Profit does not equal cash. The P&L ignores the loan principal payments. It ignores owner draws, and it ignores timing delays. What does that mean? You have a loan for $10,000. You pay $1,000 a month on it. Great. $100 of that is an expense with interest income. You have a 10% simple interest rate. So $100 is interest expense, and that goes on your profit and loss statement. It ignored the $900 principal payment because that reduced your $10,000 principal balance down to $9,100. You don't see that if you're only looking at your income statement. You can show $20,000 of profit, but only have $5,000 in the bank based on just that simple one right there. It only takes one or two loan payments to truly throw off your cash flow if you don't understand what that is to start with. Common causes of a cash crunch: payroll timing mismatches. You had that extra payroll one month. You're not taking into account that, hey, I earned all the money in June. It's now August, and I need to make sure that I have the money to pay them from what I earned, or August into September. Slow client payments and outstanding balances. If you are still utilizing accounts receivable in your clinic in 2025, it might be time to look at something like Scratch Pay, Care Credit, one of those, to mitigate how much you have to go after folks for not paying their bill. I'm not saying those are phenomenal options always, but it's one of those things where if they can't get approved for a Care Credit or a credit card or something because, hey, I had an extremely big emergency vet bill and I wasn't prepared for it, it's a lot of risk. And I know one of the things I'll hear is, but I'm here to help animals. I love animals. I want to make sure that they get the best care possible. That is great. Let's figure out how to minimize the risk of a bad debt. Another item that you have to be aware of is large inventory purchases. A lot of folks in November, December start running sales and saying, hey, buy now and pay us. That way you can have it on hand and get it into taxes. Here's the problem with that from a tax planning scenario. All that should be going into inventory if you're tracking your inventory like you're supposed to. So that $70,000 inventory purchase in November, December to get it on your income statement doesn't truly go into effect until next year. And then loan repayments are eating into your cash reserves. Explained it a slide or two ago. If you're paying $1,000 a month, a lot of this goes away because it's only the income statement you're looking at. The balance sheet also has it. So that's where you tie those together with the cash flow statement to look at both of them and where did the cash go. Seasonal revenue dips is another common cause of cash crunch. You're going to see more pets during a certain time of year. And that if you're a large animal veterinarian, that might be in the burn months, the September, October, November, December. If you're a Small animal vet, you're probably looking in the spring and early summer. Those are things you have to plan for, and that comes into cash flow forecasting. Here's a little picture of the cash flow diet timeline. You're going to see that you have outflows and expenses and revenue spikes. So you had a huge revenue spike at the start of the month when you had very little outflow. Middle of the month, you're starting to slow down a little bit. Oh, I have payroll. It jumps up and you're not bringing the cash in. You already spent that on other things. We have an issue. And then end of month, still, it hasn't been huge for the inflow of revenue, but your outflow was gigantic because you just paid more on your inventory. So you notice one is going down, it kind of levels out and goes up, and the other one just goes straight up. And this is really going to be just matching when things should happen. You don't want this giant spike come October 1st and then nothing October 15th and very little in October 31st. We want to see what we can do to spread this out, smooth it out a little bit, plan for this payroll and inventory payment, because even a profitable clinic can face cash flow dips due to the timing of inflows and outflows. Tools that can let you monitor cash flow. As I've said before, the cash flow statement, monthly inflows versus outflows. You're going to have your financing activities, your investing activities, your operating activities. You want to look at this and make sure you understand what's hitting where. You started in the month with $110,000 in cash, you ended the month with $100,000 in cash. That means somewhere in the month, you lost $10,000 in cash. Your profit and loss statement said you earned $30,000. So where's that $40,000 difference? The cash flow statement will help you figure that out. Another item you want to look at is a 13-week cash flow forecast, a rolling 13 weeks. What does that mean? It means you're looking at now 13 weeks out, and then next week you're looking at that week 13 weeks out. It's going to help you really plan for the next 2-3 months and understand where your cash flow is. You want to take historical data to fund that and funnel it into that. Another thing you want is the break-even analysis, so you know your must-hit revenue each month. How do you do a break-even analysis? You take your fixed cost that you know you have monthly, whether that's $10,000, again, easy numbers. And you're going to say any other variable costs are a little bit more difficult because that's going to depend on how many people you see. So your fixed cost, how many patients do you need to see if your fixed cost is $10,000 a month and you see 100 or you have $100 per patient on average? That means you would need to see 100 patients in a month just to break even and have net zero. It's something that you should be doing in your clinic to see, and that way you can have an idea of, well, I really want to see a 20% growth. I want more. So now I need to see 120 patients without increasing your fixed cost. Practical cash flow strategies. Spread out large vendor payments when possible. Don't just pay it all at once. If you are ordering from Covetrus, if you're ordering from different vendors, go ahead and utilize that, but make sure you don't order all at once. Try to spread those out over time to help with your cash flow, because there's nothing worse than going out and spending $80,000 and just having it sit on a shelf. Encourage upfront payments or deposits for services. If you have a large complicated surgery coming up, hey, I know this is what it's going to cost. We require 20% down. Or if you have a person who is just getting a very common spay or neuter, you know what that costs. Go ahead and bill them up front so you get paid in advance. Use wellness plans or subscriptions to stabilize recurring revenue. I love wellness plans where they pay early or even monthly a fee to see what's going on. This allows a predictable cash flow to come in, and you're only servicing these once a year, twice a year, whatever it is you've worked out. You can bundle different things like the yearly vaccines along with something even as once a quarter grooming. So they get this subscription model, you get the cash, you hold it, and you put it into a unearned revenue account, but you know it's there. And then you should be building a 1 to 2 month cash reserve. If you are a person who requires that you keep 3 to 6 months in your personal bank account, Treat your business the same way. Get that cash reserve so you know if it goes to zero, how long you have to get it going again. Leveraging financing wisely. I am not a person who will preach, go out and get a loan for this, go out and get a loan for that. What I will preach is, in times when you need it, avoid the predatory lenders. If they're the only ones who will lend you, let's figure out a different way to help you. Credit lines can help smooth timing issues, but you have to use them strategically, especially when they are a variable interest rate. You don't want to just take it out and pay it off like a typical loan. You're going to want to run a lot of stuff through that as much as you can to reduce that daily interest. Avoid using debt for recurring expenses. It should bridge timing, not fund losses. If you're having to take on debt just to keep the doors open, let's evaluate where we can have some strategic cuts that will let you sleep a little bit better at night, knowing that, hey, we can do this. It might be time for a financial plan audit and just see where you're at. And then track repayment schedules closely to avoid future crunches. You want to try to make sure you're not having to pay everything all at once. I know that's easier said than done. The credit card is due on the 20th. I have to order inventory on the 22nd. Well, I'm playing the float game. I can have this come in just in time to pay off the credit card or pay it down enough to get this. And that's one of the biggest things I see is the credit card float game. And it is dangerous for personal wealth. And it's also extremely dangerous for your clinic's health and wellness. Here are some key questions you should look at or you should have for your clinic. Do you know your monthly cash burn rate? How much cash are you burning through in a month? If you are net positive every single month, your burn is zero. If you're losing $10,000 a month, what is your burn rate? How much cash reserve would cover payroll and overhead for 60 days? And with that one, I'm going to say, how much can you, or how do you get that money put into an account so you can make sure what you're paying for that 60 days is ready if it's ever necessary. Just a nice little comfort thing to have and to hold there just in case. Are your largest expenses predictable or unpredictable? Emergencies happen. X-ray machines break. This does happen. Do you realize that your machine is on its last leg? Let's plan for that. Let's put some money aside. Let's get a sinking fund going so we can handle that. Do you review cash flow monthly or only when things feel tight? Or do you review cash flow at all, I would add. So what does that mean? Looking at your balance sheet, your income statement, and your cash flow statement monthly is how you maintain a healthy clinic. If you're only looking at it when things are getting tight, it's already too late. Last month is the best time you could have started. Today is the next best time. With that, guys, I appreciate you tuning in and sending your questions. Don't let cash flow strangle your growth. We're here. If you guys have questions, you can shoot me an email at joseph@hensoncpagroup.com. Visit our website, hensoncpagroup.com, and chat with us, email us, reach out on Facebook, Instagram, whatever it is. If you need anything, we're here for you.